keeping up with crypto right now. It's pretty intense. The speed, the complexity.
Yeah.
You've got macro politics hitting decentralized tech. It's frankly a bit dizzying.
It really is.
So today, we're really digging deep into the sources, trying to cut through that noise and figure out, what is actually driving these recent market moves? Is it like real institutional money finding new pathways, or is it just speculation reacting to what's happening in Washington?
Well, our goal today is pretty straightforward. We're taking all this raw material, the trading data analysis from firms like BuyUpPay and QCP, details on whale movements,
Right.
and synthesizing it to give you a really clear snapshot of where the market stood around November 12th. And what we found is, well, it's this collision. You've got institutional optimism kind of fueled by global policy.
Okay.
And then you have these hyper-leveraged bets from, let's say, very savvy retail traders. It's quite a mix.
Okay, so to tackle this, we've sort of structured the source material into two main themes for this deep dive.
That's good.
First, we've got this incredibly detailed data that tracks the battle for volume among perpetual decentralized exchanges, the Perp DEXs. It shows us who's winning, who's losing, how the infrastructure itself might be changing.
Right, the plumbing.
Exactly. And second, we have that high-level analyst commentary, the stuff that links big traditional finance factors like the U.S. government, the Federal Reserve, directly to these crypto movements.
Okay, so let's start where the actions may be most immediate, the volume war on the DXs.
Agreed. Let's jump straight into that because it's probably the most compelling data point we have right now. We saw overall a slight increase in trading volume across the main perp DEXs in the last 24 hours, the sources cover.
A slight uptick.
But, and this is where it gets really interesting, the sudden shift in the rankings and, the nature of that volume.
Exactly. So the top contender right now, surprisingly maybe, is Lighter.
Lighter.
Yeah. They posted a frankly staggering 24-hour trading volume, around $112.4 billion.
Wow.
Yeah.
$112 billion.
Billion, yeah. And this massive surge, it seems potentially driven by recent news. They completed a $68 million funding round, so that generated immediate momentum, a lot of buzz.
Okay, funding news pump.
Seems like it. But Lighter's rise forces this really crucial comparison with the platform that's kind of defined the space for a while, Hyperliquid.
Right, Hyperliquid. So how do they stack up? Because I see that distinction. The volume is huge for Lighter, but isn't it a bit worrying that sheer velocity, which, let's be honest, is often driven by bots and short-term leverage, is outpacing the platform that seems to hold more genuine capital commitment? What does that tell us about the quality of the current market activity? Is it stable?
That's really the key insight here, I think. When big news drops, momentum often trumps magnitude, at least initially. So Hyperliquid came in second volume-wise, about $91.4 billion in 24-hour volume.
Still huge.
Oh, absolutely massive. But their fundamental depth, it's just incomparable right now. Hyperliquid's total value lock, that's the capital actually committed to the platform.
Yeah, the sticky money.
Exactly. It's around $47.31 billion, and its open interest is about $74.7 billion. Now, contrast that with Lighter, their TVL is $11.72 billion, open interest $16.2 billion.
Big difference.
Huge. So Lighter won the volume sprint, you could say, driven by this narrative pump from the funding. But Hyperliquid still holds the crown for market depth. It's really velocity versus depth.
That velocity is still incredible, though. And just to give everyone a sense of the scale here, the second tier isn't small either. Players like ASTER, EdgeX, they're both pulling volumes well over $60 billion.
Yeah.
So this isn't just a two-horse race. It's a deep, pretty established ecosystem now.
And it's definitely not just retail action-chasing funding news anymore. This is where you see institutional use of DXs becoming, well, undeniable. We found this very specific institutional transaction in the data.
Oh, yeah. What was it?
Galaxy Digital. They withdrew 2.9 million ASTER tokens, that's about $3.31 million worth, and moved them to an over-the-counter, an OTC, wallet.
Okay, Galaxy moving ASTER to OTC. That's fascinating. Because that's not a speculative trade, right? That sounds like using the DX as a source of inventory, like liquid inventory, for a private deal.
Precise.
It suggests these big institutional players are increasingly viewing these decentralized platforms not just as trading venues, but as like critical infrastructure for moving large amounts of capital.
Exactly. The decentralized action is intense, no doubt. But, none of this volume happens in a vacuum.
Right.
When we look at the sheer scale of these trades, the obvious question pops up. Where is the big money getting its confidence from? And well, that brings us right back to Washington, D.C.
Okay, good pivot. Let's zoom out to that bigger picture then, because it really does seem like the market is laser focused on U.S. politics, on traditional finance stability as a major driver for all this volume, this anticipated macro liquidity pump.
That's precisely what the analysts are telling us. Our sources noted that as of the analysis date, the U.S. government shutdown was technically on its 41st day.
41 days, wow.
Yeah, but the market had pretty much already moved on. It was anticipating the resolution. The Senate had approved a stopgap funding bill
All right, temporary fix.
that extends government funding until January 30th of next year. So, crisis averted for now.
So the political crisis is effectively neutralized for the time being. What's the expected effect then, all that capital release?
Well, the BioPay analysts are extremely bullish on this. They anticipate a quick return of liquidity to the market basically as soon as the government fully reopens. We're talking billions of dollars potentially flooding back in.
Billions.
And dramatically boosting risk assets globally. They even point out that historically, the S&P 500 has typically seen about a 2.3% rise after previous shutdowns.
Interesting historical parallel.
And they project it could surge significantly this time, maybe even reaching 7,000 points eventually. The thesis is pretty clear. U.S. stocks and crypto asset ETFs rebound together. A rising tide lifts all boats, basically.
Okay, but hang on. If the market is already pricing in the U.S. funding resolution and anticipating this S&P surge, doesn't that mean the upside is kind of already baked in?
Good question.
Could this be a classic buy the rumor, sell the news situation? Why would the market keep that momentum going?
That's where the other part of the narrative comes in. The Federal Reserve. QCP's analysis really focused heavily on this. Remember yesterday's ADP data? It came in softer than expected.
Right, the jobs numbers were a bit weak.
Exactly. And that reactivated the narrative of a weakening labor market. And strangely, in this current environment, bad news on jobs is actually kind of good news for risk assets.
Right, because a weakening labor market is precisely the kind of data point that might push the Fed towards being more cautious, maybe holding off on hikes at the upcoming December FOMC meeting.
Precisely. That softening data reinforces the market's expectation of potential Fed rate cuts down the line, or at the very least, a prolonged pause in hikes. And that is expected to support risk assets, including Bitcoin specifically, right through the end of the year.
Okay, so it's a double whammy then.
Right.
Political stability releases existing liquidity, and the Fed narrative promises potentially cheaper future liquidity. That dual promise makes sense. That could fuel the current optimism.
Exactly. It's a powerful combination right now.
That definitely gives the macro picture more context. Okay, so now let's bring the data back down to the individual asset and trader level. Let's focus on the volatility and the massive risk that's clearly being taken in anticipation of this liquidity pump actually arriving.
Yeah, let's do that. On the asset level, Bitcoin definitely reacted to the optimism. It managed to rebound, broke back through that $105,000 level,
Okay.
which narrowed its 24-hour decline to just 0.41%. Pretty stable, relatively speaking. And it stabilized nicely around $103,000 during the Asian trading session, showing some underlying support there.
And we saw that enthusiasm ripple through almost immediately into traditional crypto-related stocks in the U.S. pre-market, right? Cementing that link again.
Absolutely. Circle, for example, jumped 2.42%. MicroStrategy was up 1.52%. Coinbase rose 1.64%. The traditional equity markets are clearly mirroring that optimism we just discussed about the expected liquidity.
But underneath that institutional reflection, the sources show us the real danger here, don't they? This risk-on environment means massive individual leverage.
Oh, absolutely. We can see this so vividly by looking at one specific trader mentioned, Pal Huang Lisheng. This account is just, it's a financial roller coaster.
Okay, let's look at the numbers, but maybe talk about the risk profile first. Just how concentrated are these bets?
Extremely concentrated. Pal's total account currently shows a net floating and unrealized loss of about $45,000.
Okay, down 45K overall.
But that net loss is the result of these wildly mixed, very high conviction positions. For instance, he has a floating profit of about $38,900 on a 1550 ETH long position.
Okay, winning on Ether.
But and here's the kicker. It's leveraged at an astonishing 25x.
25x?
Yeah. He's betting 25 times his capital on that position, basically relying on minimal price movement against him to stay in the green.
25x leverage. That's like financial skydiving without a parachute.
Yeah.
The market hiccups against you for a few minutes and boom, you're liquidated, wiped out.
And that risk is already hitting his bottom line hard. That ETH profit, it's more than wiped out by a massive floating loss of around $84,800 on an 80,000 UNI long position. And that one's running only 10x leverage. That single UNI loss just perfectly illustrates the immediate, brutal cost of extreme conviction when you mix it with high leverage and a volatile market, especially where the macro hope hasn't fully translated into sustained upward price movement yet.
Yeah, that palette count really feels like a perfect microcosm of the current market. High conviction, extreme leverage, and incredibly volatile results. Win big, lose bigger.
Mm-hmm.
And speaking of volatility in these massive movements, the anecdotal hot feeds in the sources really show the sheer range of high-stakes activity happening globally, don't they?
That's right. The feeds showed, for instance, a dormant PE whale.
Ah, the PBE whale.
Yeah, transferring all 2.1 trillion PPE, that's worth about $52 million, to a completely new address.
$52 million in PPE. What does a move like that signal?
Well, when a massive, previously inactive player moves that kind of capital, it usually signals significant preparation for something. The next phase of trading, maybe diversification, maybe providing liquidity somewhere, maybe prepping for a big OTC sale. It gets people watching.
Definitely puts it on the radar. And it's not just the whales making huge moves based on old holdings, right? We also see traders specializing in these micro-niche opportunities successfully riding this risk-on wave too.
Absolutely. We noted one trader who apparently made $448,000 just by monitoring new listings on Binance, essentially front-running the Binance effect.
Wow, nice work if you can get it.
And another success story focusing on the narrative du jour, an AI coin trader. This person managed to pull in $17.6 million trading tokens like Nego AT and High 16 sets.
17 million on AI coins.
Yeah, it just shows the market is dynamic enough, or maybe chaotic enough, to reward deep expertise in these micro trends, even while the bigger macro picture is driving the overall liquidity tide.
Okay, so let's try to summarize this for you, the listener. The current market surge seems to be fundamentally this dual story, right? On one hand, competitive innovation,
Yeah.
and on the other, leveraged anticipation. We see that innovation within DeFi, highlighted by lighter sudden velocity surge, and also how DEXs like ASTER are being used for serious institutional off-market moves by firms like Galaxy Digital.
And that innovation, that activity, it's being amplified by this promise of significant macro liquidity injection. That expectation comes from, the stabilization of U.S. politics for now, and these anticipated Fed rate cut narratives.
Right.
That combination is proving pretty irresistible, it seems, driving traders like Powell to take these bets that are, frankly, terrifying in their leverage.
Yeah, we really have to end on that central tension, don't we? While the macro forces the resolution of the U.S. shutdown, the anticipation of Fed support, while those are extremely positive signals for risk assets, the underlying market activity we're seeing shows extreme volatility, incredibly high leverage, and these massive whale movements. It really feels like an environment driven by anticipatory trading, maybe not yet established fundamental growth.
And that leads us to the final, maybe provocative thought to leave you with. Given that these analyst reports strongly suggest the restoration of liquidity, literally, cash flow unlocked by a political resolution is a key driving force for the end-of-year market.
Yeah.
How much of this current movement is truly sustainable growth? Growth based on real adoption, fundamental strength. And how much is just anticipatory gambling based purely on the expectation of those future liquidity releases?
That's the multi-billion-dollar question, isn't it? If the macro news is already priced in, as we discussed, where will the genuine lasting conviction come from next?
Something to definitely consider as we watch things unfold into the end of the year.